Sarah, this is a beat by a pretty wide margin on both the top and the bottom line. On the top line, you've got revenue coming in at $11.96 billion versus the estimate of $11.29 billion. The earnings, the estimate was 98 cents a share. Tesla earning $1.45, non-GAAP, $1.45. That's one reason why the stock is moving higher. The outlook is what's going to get a lot of attention, as well as the automotive gross margins. By the way, automotive gross margins X the environmental credits, 25.8%. So just a smidge lower than where it was in Q1, but still very strong. They say, once again, they plan to grow their capacity on an annual basis by 50%, exceeding that in 2021. That's similar language to what we've heard in the past. They also say they have sufficient liquidity. The Model Y production will begin in Berlin and in Austin this year. They are, however, moving the Tesla Semi out to 2022. It was scheduled to start this year. That's moving out to 2022. And then they say Cybertruck production in Austin subsequent to the Model Y. So that's the latest, guys. A beat on the top and the bottom line by Tesla as they come in earning a $1.45 versus the estimate of earning 98 cents. Guys, back to you.
Phil LeBeau. Phil, thank you. And that 28.4% gross margin, a sign of the beat. Mike, yep. Positive reaction, up 2%. You expect a bigger reaction to Tesla beat?
You know, I think that implied in the options market was a somewhat bigger reaction, 6%. But if you add it to what the stock did today, maybe we're not too far from that. One of the bigger questions, I don't think there was a lot of suspense, but that they have pushed through some price increases that have managed to preserve and pad, their automotive margins. So that's certainly a net positive. We knew the volumes. We always know the volumes going into this. So it's a little bit about the specifics of on the cost side and on the investment side that we didn't quite know, but you have to say a net positive result. But the stock, keep in mind, we hit 900 in January. It went into the S&P last December at a price of 695 or so. So it has been doing a lot of work down to sideways for months now.
ASPs, Phil, down, I think, about 2% year on year. Some of the China-made vehicles, which come with a lower ASP, did become a bigger part of the mix.
Right, and that's why you have the lower overall ASP, down 2%. That's not a huge hit in terms of what you might expect, especially given the pricing pressure that we've been seeing Tesla going through in China, and that is likely to continue. That's why when you take a look at the automotive gross margins, Sarah mentioned it, the 28%. And then when you strip out the environmental credits, you're down, at 25.8%? Still really strong. I think during the conference call, a lot of questions will be focused on where things are in terms of being ready to begin production in Berlin and in Austin. We've got a little bit of color on that with them saying that the Model Y will begin in Berlin and Austin this year. Certainly, it's going to be at low volume, but I think people want to get a little more clarity in terms of how quickly they expect to ramp up the production in those two facilities.
Do you see anything on Bitcoin yet, Phil? I guess that was sort of a question, whether they'd see an impairment again.
I have not seen anything on Bitcoin.
Paul, what is your initial take?
So, who knows? I haven't had the chance to see the report, but I think what these results show, it's continued strong results. And there's so much the talk of against Tesla for the last several years has been, when competition comes in, they're in trouble. But the fact is, this pie is growing so much. Tesla is such a well-respected brand in the space that even if, they do lose market share, which they will, the size of the pie will still be enough to, I think, for the company to see growth going forward. So, it's a name, we think looks interesting around here, and I'd just like to see more info, about the release and the conference call later on.
Yeah, Mike, is this a quarter where you expect Bitcoin to have an effect on the price action?
Not necessarily on the price action. They mentioned there was a $23 million impairment related to their Bitcoin holdings. This is kind of a squishy mark-to-market deal. They have some discretion as to how to take that. That's a small number, obviously relative to Tesla's market cap. What is interesting to me is that Tesla itself has taken to just de-emphasizing the whole Bitcoin thing after making such a splash. So it almost seems
like investors
more of a whim. I think so. I think they've kind of disengaged it from that, and probably hasn't been a net benefit point to point for Tesla's shares.
Phil, what else do you see?
I was going to mention, right before you went to Mike, we saw the $23 million impairment charge, which, as Mike points out, a very small charge relative to all things considered. And to your point, you mentioned, do investors, is Bitcoin still a big deal for Tesla investors? Mike has talked about this at length. Yeah, I think people still somewhat look at it as sort of a strange proxy to it. But in terms of how the company operates and its functioning as an automaker, it's not a big deal. It is not a huge part of what this company is all about. And certainly when you talk with those who are tracking the company closely, that's not what they're looking at.
Right now, we kind of have the Baskin-Robbins of batteries situation, where we have so many formats and so many chemistries that it's like we've got like 36 flavors of battery at this point. This results in an engineering drag coefficient where each variant of cell chemistry and format requires a certain amount of engineering to maintain it and troubleshoot, and this inhibits our forward progress.
Well, joining us now for more is Tesla bear Gordon Johnson, founder and CEO of GLJ Research. Part of his bear case has long been saying Tesla's batteries are not the advantage many think they are. Gordon, great to join us today. Thanks for joining us today. I'm curious what you make of those comments, the Baskin-Robbins of battery technology.
Yeah, so if you look at what they effectively said, they effectively further delayed the 4680 cell structure. They're having the same problem that everybody over the years that's tried to do this has had, the dry electrode incorporating that into the battery. So we believe last night they actually delayed this battery by at least a year. We've said this for a long time. We said they're going to have a hard time achieving this battery cell structure, and they said that. And as a result, they delayed the Cybertruck. They delayed the Semi. He effectively said FSD does not work. That was essentially a quote from him. So a lot of these things that Tesla is being valued as a technology play, last night they pushed out. And we think that's going to weigh heavy on investors' minds.
That being said, I mean, you did put out a note yesterday saying that you expected a top-line beat and a bottom-line miss. Yet Tesla did report better than expected earnings, $1 billion in net income during Q2, which was up tenfold from a year ago. Are you reconsidering your at least near-term thesis, given the fact that we did have stronger than expected numbers and given the fact that not a lot of that actually came from tax credits and the like?
Well, we don't know, right? We need the 10Q. So here's what I'll say. The numbers were good. There's no doubt about it. But the quality of the earnings were poor in our view. If you look at the rate of growth of their operating cash flow versus the rate of growth of their net income, the quality of earnings is actually getting worse. And I think one other thing to keep in mind is that, you know, if you look at the head-to-head competition of Tesla versus the new cars that are coming out, I want to look at my notes here, the Mach-E, the Hyundai Ioniq, the Kia EV6, the Audi E4, and the Mercedes EQ5, which is more luxurious and gets more range than Tesla. They're beating Tesla not only on range, but charging time. So I think that's important. And the other thing I'll note is, despite the earnings being good, their cash balance fell of roughly $1 billion quarter over quarter this quarter after falling $2 billion last quarter. So despite record net income, they're still seeing significant cash burn. And their receivables are up and their inventories were up. So there's specious accounting going on that we need to see the 10Q to really get a handle on. So overall, the numbers, the income statement numbers were good, but the cash flow statement numbers were very questionable. And all of the things that people are excited about, the Semi, the FSD, the Cybertruck, all of those things were delayed last night, the 4680 battery. So I think that's something that people really need to think about, because these are promises that Elon Musk has made. He's been selling FSD since 2016, $10,000 a pop. And he effectively pushed out with FSD. He said it doesn't exist. I think that's important here.
Welcome back. We have got earnings in from Tesla. They were out just moments ago. We want to break down the report for you now with Gordon Johnson of GLJ Advisors. We see the stock here up more than 1% in after hours, after at least on the face of it, Gordon. Tesla beat on both the top and bottom line. What do you make of the report and that all-important deliveries number from Tesla?
Yeah, so the deliveries number we already knew. We knew that what the delivery number was going to be. The earnings, both on a GAAP and non-GAAP basis, were better than expected. The revenues were better than expected. However, I think what people may be concerned about here is their credit revenues. Their credit revenues last quarter over $500 million. Credit revenues this quarter roughly $350 million. We know that their biggest credit customer, Stellantis, essentially unexpectedly at the beginning of the second quarter said, we're moving away from Tesla. We're never buying another credit. We're making the EVs on our own.
So I think that may be a concern for people because outside of those credit revenues, outside of this quarter, Tesla, has only been profitable 4 out of 29 quarters. So I think that's a major area of concern for people. And keep in mind, this is a company trading at 600 times earnings versus the industry average of roughly 8 times earnings. So what's modeled into Tesla already is tremendous growth in earnings every quarter. So while this was a good quarter, if you have credit revenues going away and you're not seeing that tremendous growth, I think people may be concerned.
Gordon, it is good to see you again. The last time I got to see you was before the pandemic. I need you to help me understand something because you've called it in some respects accurately. I mean, Tesla shares when they were $900, they're well off of that. But other analysts, your peers, say that you've gone a little bit too far in your criticism of Tesla. I mean, they are the biggest player in the EV space, and the others haven't caught up yet. What do you say to the critics that say you may be too far out on this?
Great question. So number one, keep in mind, Tesla is less than 1% of global auto sales. Their total sales last year, less than 1% of global auto sales. Number two, only 2 markets. There's 3 key auto markets, US, China, Europe. Only 2 of those markets have we seen competition, China and Europe. In China, fourth quarter of 19 to second quarter of this year, Tesla's market share has went from 23% to 11%. In Europe, first quarter of 2019 to second quarter of this year, Tesla's market share has went from 33% to 15%. So in the markets where you see competition, Tesla is ceding significant market share. And while you don't have competition in the U.S. right now, and I think Tesla's benefiting right now in the U.S. from chip shortages for a lot of the big auto guys, so they're able to come in and sell those cars. Once those chip shortages are abated, but more importantly, once the other EVs, the 35 EVs from GM by the end of next year, the Ford F-150 Lightning, and their other host of EVs that are coming, as well as the host of EVs from VW, hit the U.S. market, I think Tesla's going to have problems. So I don't think we've gone too far. I think our peers have been too aggressive in their bullishness. We have a peer at Morgan Stanley who has created divisions that Tesla's not even in. He's valuing Tesla's Tesla Air. He says they're going to have a flying car. He's already valuing them at more than Boeing. So I think people have been very aggressive in the valuation. And keep in mind, people say, you have a $67 price target, over $600 stock. Look at what happened with GSX. This is a company that people had called a fraud for many years. Stock went up 8 times, recently lost, it's down 99%. So we're not saying Tesla's a fraud, but what we're saying is there's some aggressive accounting there. But what we're saying is when reality reveals itself and people connect the dots that they're losing share, we think the stock's going to come under tremendous pressure.
Well, let's talk a little bit about that competition. You've got the established automakers like Ford and GM coming out with their cyber trucks. We haven't gotten one of those yet from Tesla. How important, or is it going to be a game changer when Tesla finally does come out with that cyber truck?
Great question. So keep in mind, right, Tesla's Model S Plaid. The promise, right, keep in mind battery day, right? Years are building up into battery day. Tesla does the big battery day. They didn't even have a battery. That's a fact. So the Model S Plaid, the promise was it was going to have over 500 miles of range. Days before it launches, all of a sudden Elon Musk comes out and says, you know what? We're not going to have that version. We're going to have the version with 300 miles of range. The reason is because the 4680 cell structure battery is not ready. Keep in mind, Tesla does not make its own batteries. This is a major misconception. They're going to buy those batteries from Panasonic and LG. However, if you look at what Panasonic and LG have said, they've said that, listen, this 4680 cell structure is extremely hard to mass produce. We're not there yet, and we don't know if we're going to get there. So with respect to the Cybertruck, we don't think you're going to see a Cybertruck this year. And if you see one next year, we think it's going to be much different than the specs that Tesla promised. We don't think it's going to have 500 miles of range. And we think it's going to be much more expensive than the $40,000 price tag that Tesla put out there. So we think that's going to be a disappointment. And with respect to the Semi, we don't think you're going to even see that next year. And one last thing, everybody's talking about the GM recall, right? GM found, 8 Chevy Bolts spontaneously combusted and caught fire. GM recalled every single Chevy Bolt. Tesla, this weekend we found a contact that has identified 200 fires, 200 Tesla car fires over the years, 200, and Tesla hasn't recalled one car. We think that's tremendous regulatory risk and potentially financial burden risk that this company is going to see if the regulators wake up and do their homework. So we think that's something that people need to focus on.
All right, you gave investors a lot to think about there. Gordon Johnson of GLJ Advisors, good to see you.